Welcome back to the channel, investors. I just had another great month in the stock market, and it had very little to do with my overall stock gains and losses. Instead, it had everything to do with all the cash dividend payments I received from companies for doing absolutely no work. This is true passive income. It's just buying great stocks and companies and stashing them away for years and collecting cash all along the way. We can actually use this money to pay bills, and it's actually how I'm going to reach financial freedom one day. In today's video, I'll share exactly what companies paid me in my $115,000 dividend portfolio. So just make sure you hit that like button for the algorithm and or subscribe because I make these update videos every single month. But first, we have to see what companies gave us a pay raise. Because when inflation has been as ridiculous as it's been lately, companies better be increasing those quarterly payments. We had Prudential Financial give us a 4.3% pay raise, and that's not the most juiciest dividend hike, but remember, this is a company that already boasts a starting dividend yield of over 4%. We have the Old Reliable and Otter Tails giving us a nice pay raise of 6%. This is a small utility company in the Midwest. Now, I just made a video on 3M stock, and they raised their dividend by a whole penny. If you want to know my opinions on the stock for the foreseeable future and why that dividend might not be as safe as you might think, be sure to check out that video. The data center giant Equinix gave us an 8% pay raise, going from $2.87 to $3.10 every single quarter. Maybe one of these days they might finally do a very long overdue stock split. Dividend investors love Coca-Cola, which after years of giving us penny raises, decided to spoil us with a 2-penny raise this year. Woo, shopping spree time. Hopefully we don't spend it all at this next stock, and that would be the hospital provider MPW, Medical Properties Trust, and they gave us a whole 1-penny raise. So to be fair, it looks like a lot of these companies that have given these low dividend raises, they already had really high starting dividend yields to begin with. Like MPW, their starting dividend yield is 5.6%. Chubb continues its dividend aristocrat streak for the 29th straight year as this international company raised its dividend, this time by 3.7%. So a lot of companies gave us dividend raises. It makes sense as it's a new fiscal year. They want to start off Q1 with a bang. Those dividend checks hitting the portfolio also made a huge bang. So let's get to the real reason you actually clicked on this video, and that's to see all the companies that paid us in the month of February. So starting off here, we have AT&T, ticker symbol T, and they paid us a whole $7.80. It's pretty unfortunate that AT&T is cutting their dividend, so the $7.80 is probably going to decrease in the foreseeable future. But no need to worry, this is exactly why I'm diversified and own many other companies, including General Mills, ticker symbol JIZ, and they paid me a whole $2.04. Not gonna lie, I've been a fiend for Cocoa Puffs lately. You might say I'm cuckoo for Cocoa Puffs. Cocoa Puffs is of course a General Mills cereal, and when I'm not eating General Mills cereal, I'm enjoying my dividends from Lowe's. Lowe's paid me $1.60. This is a more recent acquisition in the portfolio, still dollar cost averaging in as time goes on. So just gonna continue to build this position. Recently just bought some paint from Lowe's. They sell everything home improvement related, so it's really just a one-stop shop for everything you need right there at Lowe's. After Lowe's, I had a dividend payment from the ETF JEPI. They paid me $9.16. So it's nice to get these monthly dividend payments from these ETFs, from these income ETFs like JEPI. After JEPI, we had MasterCard paying me $4.90. So MasterCard share price has really recovered in recent weeks. So glad to see that, and glad to see that they're paying out dividends. After MasterCard and its $4.90 dividend, we have arguably the greatest company of all time, the GOAT, here in Apple. Apple paid me $8.58. Apple not only pays out so much in dividends, but they also buy back so much of their own stock. So Apple is just really a no-brainer, just going to continue to dollar cost average into this fantastic company. After Apple, we have AbbVie, which paid me $18.33. So AbbVie's share price has just really been going to the moon lately. And this is really a best of both worlds situation here. We have AbbVie stock reaching all-time new highs, and then we also have huge dividend payments from this pharmaceutical company. Let's hope that they can continue this hot streak. After AbbVie, we have Procter & Gamble paying me $5.22. Still cleaning my hair with Head & Shoulders, a Procter & Gamble product. So we really should be thanking P&G for having less dandruff in the world. So after P&G, we have Realty Income, not Reality Income. This is a real estate company that owns, a lot of gas stations, convenience stores, Walgreens. They own the real estate that these entities operate on. And this is one that I have a drip on. So they paid me $6.88, and that went into buying more shares of O. So I'm getting about 1/10 of a share of O each time that O pays out dividends. So glad to see this monthly REIT pay me for the month of February. After O, we have Costco at $2.37. So you probably thought I was going to go on and on about how great of a company Costco is, but I recently had a nightmare experience with their appliance team. I ordered a washer and dryer from them, and basically, long story short, they weren't able to install the washer and dryer because for some reason, they didn't include a $12 stacking kit for a $1,300 purchase. So the Costco people dropped it off, but they later told me that they were never gonna come and install it because even after I got the stacking kit, they said it was a liability since it was already delivered. These things weigh 500 pounds, so good luck moving that on your own. Sounds like a bunch of BS, but moral of the story, don't accept delivery if something is not up to par because they will later make up stupid excuses not to install it. And don't buy appliances from Costco. That's enough negative energy. Let's get back to that positive energy, guys. After Costco, we have a company that you don't need to worry about any installation because Starbucks, they should be giving you your coffee right away, and they paid me $8.33. Starbucks is a position that I've been buying a lot into lately because it has been on quite the dip, and I see this as a great buying opportunity. So after Starbucks, there is Newsy, another income ETF here. I own 100 shares of them, and they paid me $15.87, which is a little bit less than they had paid in prior months, but more on that in a little bit. Okay, and then after Newsy, we have its cousin here in Globalx, and its ticker symbol is back to being QILD for the foreseeable future. Let's see how they actually classify their distributions this year. So they paid me $21.21. So it's been really nice to see a lot of these companies now pay me in the double digits and hope to continue that for the foreseeable future. Altogether, I had 13 different companies / ETFs pay me for a grand total of $112.29, which is a 114% pay raise from February of 2021 when I only made $52.60. Now at first glance, you might be thinking, this tranche, it does look a little lower than it did last November. That was the last time that this tranche occurred. And really the reason for that is just some variance in the payment dates for some companies. For example, JP Morgan Chase, they pay dividends on the last day of a month. So depending on if it was a weekend, it could really show up already into a next month. So that might throw off where I track it. Or just some ETFs, like I mentioned with Newsy, QILD, they often don't pay out the same amount every month when dividends are distributed. So that could cause some variance. But come May, I know it's all going to even itself out. So even if I don't make as much in February, I know I'm going to be making a lot in March. Guys, I can already tell you March is going to be a fat month. I'm definitely going to be hitting $300 a month in dividends at some point this year, which is just crazy to think about. So that's actually why my monthly average, it went down to $171 a month, and my quarterly average went down to $512 every single quarter. Again, it's not a huge deal. It's just the timing of when companies pay dividends that fluctuate. So I always make these videos not to gloat at my positions and the size of my portfolio, but it's to inspire others on the journey, no matter how big or small. Guys, if you go back to my earliest videos, which I actually don't recommend you do because the video quality is just so bad, I started YouTube when I had $7,000 in my stock portfolio. So now it's ballooned into $115,000 3 years later. It's just with hard work, guys, you can accomplish anything you set your mind to. Remember, the work you do today, it might not feel like it's making any difference, but you really will reap the reward as time goes on. Dividends really allow for empowerment to go back to you, for you to control the narrative, not your employer. It's so much better to rely on dividend companies for pay raises rather than your employer, who will always try to shortchange you with the yearly merit increases if you're lucky. While I still probably make more money going to the bathroom at work these days, I know as I keep crossing new milestones, I can continue to cut out more of my life expenses with dividend payments that are totally passive. I'd love to hear how your dividend investing journey is going in the comments below. Make sure you hit that like button as it really helps out the channel, and make sure you join the channel for more monthly updates on dividends. This is the type of transparency that you won't see elsewhere. As always, my videos are found in podcast form under the Collect Cash podcast name. And I will buy, stash, and collect cash. See you later.